All right. Good afternoon, everyone. My name is Gonçalo Moreira. Today is an analytical session. We are going to cover some of the majors, the recent price action, and also consider that analysis from a strategical point of view, so that you can plan your positionings for the days ahead. We will start with the majors, euro dollar and dollar yen. Basically, the reason I like to start with the majors is basically because these are the pairs which are more liquid, more transacted in the spot forex, and thus the price structures as we see in those majors reflect a lot of price action seen in the crosses and also in other majors. For instance, if you want to have a brief view on the liquidity of these two pairs, I recommend you to check this link here. This is a link to the Bank of International Settlement. This is the last report, last survey, which was done in 2010. It's a triennial, very useful to assess the trading volumes for each currency pair, and also the trends within those volumes across the majors and well, across all currencies, in fact. And here, if you can open that link for a moment, I can just take just a brief minute to guide you through that PDF. It's a PDF file. Let me just close the window here for a moment. If we go to, for instance, let me search the page here. If we go to page 12, for instance, we already see here the currency is listed, and the currency distribution in terms of average daily turnover from 89, 2001, 2004, 7, and the most recent one in 2010. And here we have the US dollar as the most transacted currency, followed by the euro and the Japanese yen. So therefore, the pairs resulting from the combination of these three currencies, that is the euro dollar, the dollar yen, and also the cross euro yen, are the most liquid ones, and these are the pairs which usually guide other crosses in their price action. Okay. The report goes deeper into the volume transactions. We see on the next on the page 14, we already see specify the spot average daily turnover, and again we see the dollar, euro, Japanese yen occupying the first three positions, followed by the pound and the Swiss franc. Here we see listed the majors, what we call the majors, and also followed by minor currencies, which give the minor dollar pairs if combined with a US dollar. Okay, so there is a reason why we usually start analyzing the market with the most liquid pairs. Okay, so let me abandon here and recover the camera. Okay, fine. Sorry if you are hearing some background noise from the office here. If it's getting too nasty, please just tell me. Okay, if there is any problem with the sound. Okay, on the euro dollar, we start here on a daily chart. Okay, we see clearly the pair is still in an uptrend, as evidenced by the sequence of higher highs and higher lows. We can see those on the weekly chart. Let's just switch to the weekly chart here. We see an ascending support line here on the weekly chart. On the bottom of the image we have two oscillators plotted. I will come later to the use of those oscillators from a strategical point of view. Is on those higher charts, the weekly and the daily, is interesting to see what these oscillators did in the past. We see here on both oscillators higher readings towards the recent price action on the top here. So no signs of a possible divergence, which is a common setup seen at market tops. It's common, but not always. And so we had here on MACD an acceleration in trend. Also the RSI touching here the 75 level, printing slightly higher highs here on the relative strength index as well. Nevertheless, we had a strong correction. Okay. If we minimize the chart here, it's interesting to see, although we have here two indicators which are considered oscillators, they have a big difference, the MACD and the RSI, which I wanted to point out, which is the fact that the MACD is an open indicator, that is, it is not bounded by upper and lower limits, while the RSI is. The RSI is bounded by 0 and 100, whereas the MACD, pardon, is not limited to neither the upside nor the downside. So when we pretend to compare what the pair is doing in case of reaching higher highs on the indicator, then usually what we do is to compare historical extremes on the indicator. And here we can see, although price reached a considerably higher high, we didn't touch the recent high as we had here in September 2010. All right, so we switch here back to the 4 hour. We see that ascending channel more clearly, which is also seen on a daily. We had two extremely bearish weeks from recent highs, and this broken trend line connected from the start of the year here in this February interim low. And this breakout definitely suggests that we have a major top in place. On intraday charts, that is on 4 hour, 1 hour, from the 9 zone after a continuation failure, and fresh weakness in the European morning broke below 41.22 and previous low, and now below round number 41. We have now a recent recovery here across the new weekly pivots. These green lines are the weekly pivots from previous week. We have just crossed this week's pivot to the upside, and we are still inside here a downtrend channel. Inside that channel, and recovering a big part of the action that was registered during Friday's late session, American session. The former resistance is currently providing support around 140 40, which is now confluent with the channel's support return line. Okay, in that area here where I put the ellipse, this is the area what we that we would look for to capitalize on an eventual breakout to the upside. We could have obviously an acceleration of this downward channel to the downside, and probably with that acceleration we would break the level marked here at 40, 50, 20 more or less, which was former resistance around here, broken here during March and tested as support during the same month. We have come now back to that broken level, and we could see this level playing out as support again. And let's see what type of action develops from here. If we see a break down from this level, we would probably see an acceleration of that channel, which is clearly seen on the 4-hour, an acceleration down, which is from a strategic point of view more risky in terms of asserting the risk. If you're already on a short positioning, it's obviously easier to probably trail stops along the channel, more aggressive along the baseline, more conservative stops along the return line of the channel. But as for new commitments, a breakout of a channel in the direction of the channel itself is obviously a more risky attempt, since we have already a trend in that direction, and so that any retracement could be a change in that intermediate trend, which is right now to the downside. Okay, coupled with a break under the daily trend line support from 34.29 bolsters the evolving bearish structure as we are currently seeing, and back over the lower high at 44.25 and the building of a lower swing high around that area here would be, in my opinion, required to strengthen the bearish outlook that remains in place, and also to make short attempts less risky. Okay, so that area, either we would look to capitalize on the upside till a test of that previous support, now resistance line, or we would wait for that resistance to act as supply level, and look for a continuation of the downtrend to the upside, protected thus by that ascending dynamic support level. If we move here to the 1 hour, we see currently inside that channel a brief, what we could say, brief bullish divergence playing out. On the MACD, we would see the same on the action of the RSI, since the price has been printing lower lows, and the oscillators didn't get to print a lower low on Friday, and probably that divergence is already playing out here, as we see with his recent reaction to the upside. On the daily, we see the rally from March weekly mega candle here, from that mega candle line, retraced more or less 61.8%, and this is stalled right now at a 50% of that whole range here. On a short term, we are still under the that influence here of the hammer printed on the 5th May, and also we see the probably better. I was referring to that hammer, which by the way we had the same pattern printing on the 4-hour, but was referring to this hammer candle printing here on the daily structure, and also the bullish engulfing here on the 10th. So we are still under the influence of these two reversal patterns inside a nice ascending channel. By the way, we had these formations here occurring inside that large, what we could say, a large Maruboso candle here on the 18th. Okay, to the upside. So that hammer here at the start of the channel, as well as the hammer line on the daily, went down to pick up that demand located here. We have also a coincidental confluence here between the low of that hammer and that weekly pivot level from end of March, last week of March. Confluences are useful in determining the strength of certain levels. Let me switch it back to the 4-hour, where we see that ascending channel more clearly. So short term, as I mentioned, we're still under the influence of those two reversal patterns, finding or confirming the direction of the channel. Low and lows in this pair have been reached softly, suggesting a rounded bottom figure since April that we would probably see on the weekly, with that bottom here. The figure is not yet full-fledged, but we could eventually think of a lot of range-bound action for the coming weeks, suggesting the completion of this rounded bottom. This would add weight to a view that we are moving into an accumulation pattern. A lot of backing and filling price action. So that would make us, in terms of commitments, preferably switch to lower time frames in order to capitalize on this pair. Here the same, a break out of the channel in the direction of the channel. In any case, would be limited here to the upside. We have today. I've plotted today a Fibonacci extension taking yesterday's trading range. We see that the 161 level was more or less confluent with this supply area here, which was limited by the last week's pivot level, the weekly pivot. This week's pivot level is slightly above. This was the pivot for 2 weeks ago. We had the pivot level from last week, just slightly below this week's pivot level. And as a major area to capitalize above the channel would be that area here. To these previous supply areas here, clearly seen on this hanging man, and this initial reversal here on around the 24th. In view of that prolonged round bottom, we should thus allow for violent spikes, especially on the downside, which tends to become uncertain and accumulation processes. Okay, so in that case, if we have a ranging type of price action or rounded bottom, this would suggest accumulation, and in that case we'll be especially careful on the downside. Okay, we may see strong spikes to the downside as is usually seen in accumulation processes. So that 8280 area on the 4-hour clusters right now supply. It does resistance. This is confluent here with the upward channel by next week, more or less. Okay, so we had to see how price action develops during the entire week and see if next week we have that acceleration of the channel towards that confluence into that supply cluster at 8282. Okay, although that supply has been partly observed on the 27th, we have that spike here observing that supply, suggesting that supply located here might be not enough to attract prices to that level. Let me switch pairs here to the Euro Yen. And here we have the daily chart. I've drawn here a possible triangle formation on the daily, which is more clearly seen here on the 4-hour. This would be a triangle formation, a multi-week and even multi-month formation, which lacks perhaps some price action in this area. There is really too much white space on the chart in this area here, although the breakout towards the end of the formation is a breakout as usually seen in triangular formations, and we have here the apex of the triangle just above this week's opening, and sometimes when we see a breakout of triangular formations, we see a coming back of price action to that apex, to that triangle apex, which sometimes acts as a strong, in that case, resistance of the formation. Nevertheless, we are 500 pips away from that level, and it will be probably difficult to attract prices so far. But confirming that change in direction, we would have here a divergence with the oscillators, since we are printing lower lows. We had on Friday a lower low printed here, similar to the action seen in the euro dollar. In fact, it's a similar action. We have this area here, this cluster, this small base building here, is as seen on the euro dollar at more or less half of the price action that we have seen in the last 2 weeks. Nevertheless, this cluster here has been visited by mid of last week, taking some of that, observing some of that supply, which we haven't seen on the euro dollar. On the euro dollar, we have a similar downtrending channel, but this level here is still fresh in terms of supply. That is not the case here in the cross. So if we could see a cross above the downward channel above that return resistance line, then obviously we would encounter first resistance here at the weekly pivot, which we need to extend here to that side. But in the interesting action would probably take place in this area. So if prices are able to cross above that supply area here, then we could see a reach of the triangle apex, and then we would look obviously for any reversal pattern occurring at that level here. Similar actions and patterns we see also in the Swissy. On the 4-hour here, we notice let me go back here to the normal settings. In the MACD RSI, as we see two negative divergences emerging on the 4-hour, and we see that same pattern. In that case, an ascending channel. That channel is a potential upward sloping channel, since we had, as for the baseline, we have two contact points, as seen here and here on this interim low, but the return line is just a parallel taken by projecting the baseline to that swing high over here, but we don't have a second touch of that return line, so that is for me just a potential channel which I would right now eradicate from the chart, since we have a break down here from this line. And what is more interesting is the price action as seen through this sloping line here, which was reducing that momentum inside that potential channel. Okay, in forming wedge, ascending wedge pattern, as we could see. Eventually, we had this confluence here between this recent supply level here, which are also formed at a weekly pivot 5 weeks ago, and we were eventually looking for a confluence of the wedge resistance with that level prior to materializing a downward break of the pattern. Okay, if we minimize, let me stay on the 4-hour, and we see that wedge-like pattern here clearly in the context of a downtrend, and that means it's a continuation pattern. So a wedge, an ascending wedge in the context of a downward trend is a form of a rally, a form of a correction, and thus indicating continuation of the trend that is, this case, downwards. Once the wedge pattern is broken. Okay, we can go down here to the 1 hour just to observe the most recent action, the breakout, and as the channel looked, that the price looked to that contact level here, which was previous resistance, broken over here, tested last week, and again we searched to confirm that level as a resistance. Obviously, when it comes to a strategical approach, once we have done an analysis and we have a broad view of what is happening across several majors, obviously we want to determine, before we apply our strategies, what is the direction. We want some kind of of mechanism or procedure to determine the direction we are seeing in the price action. We want also to determine the momentum, that is the speed of that trending price action or sideways price action for that matter. We'll want to determine the momentum prior to identifying those setups in terms of risk to reward, and obviously prior to finding our trigger, which would come obviously dictated by our strategies. And in terms of assessing the direction or momentum, we could stay here with those two oscillators, and we might think that by duplicating oscillators, we are getting the same information, since we have here the MACD and RSI, and we may think that we are duplicating information. But interesting thing is that we can use both for strategical purposes, and we can even differentiate those two indicators by playing with the settings. Okay, let us just briefly think of what these indicators aim to capture. We have the RSI, which on one hand is based on the assumption that overbought levels generally occur after the market has advanced for a disproportionate number of days or number of periods, and that oversold levels generally follow a significant number of declining days, declining periods. And then we have on the other side the MACD, which is a form of trend deviation using two moving averages, and it obtains this name from the fact that the two moving averages, the two exponential moving averages to be more specific, are continually converging and diverging from each other. So it's the MACD can be useful in the trending market. When the MACD is above zero, it signals that the faster exponential moving average is above the slower exponential moving average, and vice versa. Okay, so the MACD is also considered to be used in analyzing trending markets more than RSI or stochastics. Okay, and in that case we could change a bit the settings. Let me just change here to much slower settings by using, for instance, a series of multiples of 9. We have here 36, 81, and 18. We already see here a much slower oscillator, and we do the same changes here with the RSI, changing it to a slightly more sensible in oscillator to 9 periods, and already we see here how these lines, which were previously used to determine divergence, well, that one would be more or less still in place. But that is not the aim with these new settings. In that case, we want to use that MACD in that case to spot trend direction. Since it's very slow, it will oscillate only when there is really a significant change in the direction of the price structure. Okay, and we have that change. For instance, here I will put here a line on that SED cross to the upside. Okay, we had that change occurring here with this large candle, with this large bullish candle on the fifth. Okay, we are assessing here the 4-hour chart, and we would be still in that upward movement as signaled by the MACD. So in that case, we are in order to gain a notion about the direction, we are using an oscillator. We could use any other rule. We could guide ourselves by trend lines, by directional movement, or any other instrument. So in fact, it doesn't really matter what we use, but the fact that we remain with one objective source for that information is probably the most important. In that case, the MACD oscillator would be used to gain a notion of in which direction price is trending, and we would then interpret the RSI in a different way. Okay. In that case, we would switch here to the 1 hour, and we would omit what is seen on the MACD on that scale. So we trust the MACD from a higher time frame, and in that case, we would, for instance, look for small patterns on the RSI structure, like, for instance, this swing failure as seen here. Okay. By the way, a swing failure is like a divergence. It's a small pattern that we may we were explaining here the use of two oscillators. In that case, a much slower MACD just for trend direction purposes, and we have that indicator here with a much slower settings as the standard one, 36, 80, 81, 80, and we have that cross to the upside in the oscillator, as evidenced here through that large candle on the fifth this month. So from there on, we are considering an uptrend, and from here on, we would go on a lower time frame and obviate what is happening with the oscillator and in this time frame, and look for patterns in the RSI. Okay, obviously confirmed by price action. And we were seeing this swing failure here as an interesting pattern, which was confirmed by price action with this bottoming formation here on the weekly pivot last week. Okay, a swing failure, by the way, is a type of divergence. That means not every divergence is a swing failure, but swing failures are usually a type of divergence. And let me zoom just that you see exactly what it is. And a swing failure to the downside is evident through a lower low in the oscillator, and a short recovery and a higher low. Okay, and once we have that break of the confirmation line, then we would have the trigger as signaled by the swing failure. Okay, and that was here confluent with that base building around or just hovering above the weekly pivot. Okay, that would be one of the interesting signals. Okay, similar signals we could take, for instance, on the pound. Let me just search for the okay. Let me eliminate here this is the Osmo. Expand a bit. I will change the settings again to the same one, 36, 81, 80. Okay, so here we see a much slower MACD, just for the purpose of indicating what is the direction. And in terms of RSI, I will make it a bit more sensible to price action. Okay, and here I mark just that we recognize it on the lower time frame, the change in direction, as evidenced through the MACD. And as we switch to lower time frames, okay, let me zoom a little bit. Here we have the change in direction. Okay, we don't need that MACD on that chart. We just look for what is happening on the RSI. Let me just enhance the window here. Okay, and then we look in terms of what we can do during a downward trend. Okay, and here we have, for instance, an overbought situation in the RSI. Okay, as we see with prices for the first time in many days occupying that overbought area, and a very interesting acceleration towards the weekly pivots and a rejection of that level. Okay, so here we have confirmation with price action of something not very usual seen in the RSI. So here it's we'll take a short positioning considered low risk, since we are in the direction of that major trend, as evidenced in the higher chart, and very protected here through the confluence of the weekly pivot, those spikes evidencing that the price is searching for supply coming from these downward accelerations as seen here. So this would be considered a short commitment of low risk. Okay. Coming back to the 4-hour chart, we would see still that downward movement, and we can do the same with any other combination of time frames. Here we have on the daily a recent cross of the MACD to the downside. Okay, so in that case we would look on the 1 hour. We would look for any corrections to the upside and extreme overbought levels on the RSI in order to attempt to short the pair with less risk. All right, I think we have probably just few minutes left. If there is any particular situation you might analyze. Ashu asks me if I draw the channels manually or by any hand. The channels are drawn manually. Are drawn manually. In order to draw a channel, you first you need obviously the baseline, which is in case of an upward channel, you take higher lows in that case, or in case of an upward channel, in case you take the higher lows, and you just project that line to swing highs to the upside to have what we call the return line, which will be the resistance. Many times you have the baseline already established, but you have only one contact point to to establish the return line. So in that case you have a potential channel. Just only in case you have a second touch to that level, you can speak of a channel. Okay. Well, there are in fact no perfect channels. Usually you may take either the high or low prices, absolute high or low prices. You may also take the candle bodies, like I've chosen to take here on that instance. For example, we have these two intraday spikes here, and I just took the line cutting through that price action. It's really there is really no recipe for trend line drawing. The interesting thing is that you always search for to combine and to confirm the breakouts of the channel action with horizontal levels, and eventually searching also for confirmation in other indicators. Okay, for instance, we see a lot of cases where we have false breakouts out of channel formations, and this is often the case when we have inside the channel a strong in that case would be a strong support level where prices haven't still come back to it. So in that case you can easily see a breakout of the channel and a retest, or even price going back inside the channel for a continuation. Okay, so it's always interesting in case of channels to differentiate or to combine those dynamic lines with horizontal ones. The green horizontal lines here are weekly pivot points. Okay, on the daily chart is a bit compressed, but on the 4-hour we see them more clearly. These smaller lines are daily pivot points and their respective resistance and support levels, and the green ones are the weekly pivot points. Okay, as calculated following GMT. What I usually search is for a confluence of those levels, either with dynamic trend lines, ascending or descending, or any other fresh demand or supply levels I may see on the price structure. Okay, so if we go here to the hourly, we see it more clearly that we have those the pivot levels, the daily pivot levels, and the weekly stretching along the week. Okay. We may go deeper into that approach of changing the parameters of common indicators in order to use them in a combined manner, as we have done here with combining two oscillators, MACD and RSI, and always searching for those confluences. Okay, but the important point would be to have tools in place so that we can first determine the direction we are taking. Just it's important just from not to get too biased towards a direction. So just that we have one tool that dictates for us. Now we are in an upward trending mode, or a downward, or even sideways. Okay, because very often once we do the analysis, we always have our preference as to where prices should go, and it's always good to have a tool which gives us an objective indication of what direction price is going. Okay, it may not be the same as other analysts are doing or are seeing on their charts, but at least for us we have a clear direction. Well, this pivot point is, in that case, it's a custom indicator. You can find it, I think, easily if we search for MetaTrader indicators. Probably if you visit the MetaTrader section on our website, you probably can find those pivot levels. Okay. Boyki, is 1 hour lowest I watch? Probably yes. You know, I mean, I could go as low as 1 minute, but with the same principles I apply on dailies, 4 hour, 1 hour. But it's simply because I don't have the time to watch price structures on very small worlds. We could go, for instance, to the 15s and look for similar patterns as we have seen here in the RSI, but usually I don't go lower than 1. My trade frequency is not very high because usually what I capitalize is on extreme movements against the prevailing trend, so that I can get on the trend direction with a lower risk. That happens on obviously on all time scales, but 1 hour it happens enough times to be able to capitalize on that. But it's the principles. Once you define a concept on which you trade, usually it should apply to any time frame. Usually, obviously, the lower you get, probably a bit more random, because random in terms of price action on lower time frames gets probably more dictated by driven by order flow. You have to watch probably order flow a bit more closely, and obviously faster decision making is required, but should stay or should remain the same. Maybe on a future section we can go into more specifics, but this session was thought just as an analytical, strategical approach. Fine. I think we are ready. We passed the time. I want to thank you very much for your attention, for your time. Bye bye.